The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be looking at what I consider to be almost a textbook perfect chart on oil. We're going to be running through timings, levels, behavior of price, and reviewing some very important but simple concepts and how this was almost perfect to a T from Friday to Wednesday for a well-engineered template, 3 days of rise. Just an absolutely textbook perfect opportunity for traders today on oil. I just want to go over some basic concepts, reinforcing that every single thing that we go over should become second nature. Oil opens at 9 a.m. And again, that doesn't mean that there has to be a trade at 9 a.m. That means that market will come to life at 9 a.m. And then the larger thesis of what do we have in place. Friday's the closing range of the week. Friday's the closing range of the week and the closing price of the week heading into our new week. And as I repeat, that's a reference point for when the new week starts to auction. That price is fixed, as are the highs and lows of the week heading into our new week. So hindsight pays. Monday is the opening range of the week, and that is our new day one in a new timing cycle. Tuesday is our initial balance, day 2, Wednesday is day 3. And we're looking for parabolic opportunities, whether they be reversal trades, whether they be range expansion trades, as we saw on Bitcoin. But each day, we will have the opportunity to assess a range expansion from closing price in that larger template. Are we making higher highs? Are we making lower lows? Those are range expansions. So that gives us a thesis, day 1, day 2, day 3 for a larger template, but also for session trades, 3 session setups right out of the playbook. And the purpose of me going over this more in depth is to clarify a lot of misinformation and confusion that has come up from other, crossing over information and everything else. And I want to be very specific. This is very simple. It's a very simple model, and the more it's complicated, the more reckless and inconsistent the results will be. So if you step back, we're looking for the best templates, the best instruments on the day. There are 3-day setups, high of week to low of week, low of week to high of week. There are 3 session setups, high of day to low of day to high of day. And we can get those setups within the template over the larger 3-day template. We will have 3 session setups as well. And again, we went over different opportunities that occurred heading into major red news yesterday, day 3 longs, day 3 shorts, first red day, first green day opportunities, and inside days. So the closing price of the week, we can use that to form our thesis based on how Friday closes and how Monday trades. So if oil opens up at 9 a.m., we have an entire day before making a decision as to whether or not that market is offering us a best trade candidate on the day or within that 3-day template, Monday, Tuesday, Wednesday. How range expansions can give us valuable information. Paul Tudor Jones, when you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. Embed that into your memory bank. 3 levels of rise or fall, and these can be measured, as I've gone over in previous videos in that playlist that everything you need is in this playlist. I specifically went through the 3 levels that every single trader has. The closing price of the week can be used for us measuring distances for potential areas where markets can reverse from. especially if it's a 3 pump and dump, 3 levels of rise, 3 days of rise, pump and dump template or fall. The 3 levels again, high of day, low of day, closing price, and how each day that can give us the information we need to assess if we have a best trade candidate. And then on the day itself, do we have a well-engineered template on the day, a pump and dump or dump and pump template? And then, of course, is there any major red news that would hinder us from entering into this market, or do we need to wait for that news release and take a position afterwards if indeed there is an opportunity? So we had major red news Wednesday, 10:30, oil inventories, 10:30 a.m. Wednesday. I'll walk through this chart day by day. We'll go back to the start. Friday's the closing range of the week. We had a range expansion on the long side. Now traders are going to call this a false break, but we're going to call that a range expansion. And then when we come to our screen at 9 a.m. on Monday, we have a new lower low in place. So we have a higher high on Friday in our closing range of the week, and we have our closing price of the week, and we have a lower low that is taking out Friday's low prior to 9 a.m. on our Monday. Now Monday gave us a 9 a.m. reversal. This is a 5-minute chart. Monday gave us a 9 a.m. reversal heading back towards the closing price level, and that ended up closing as a range expansion on the top of our high of day level above closing price. So you'll notice that the market trades below closing price the entire day before making a range expansion and then reversing at 9 a.m. New York time. I will also point out that the low that was established in our London session, the low of the day prior to our 9 a.m. oil market opening, was 75 cents below closing price of the week. The entire day is below closing price, and we are 75 cents. And I know there'll be a few traders that will say it's a couple cents more than that or a couple cents less. It's 3 levels of 25 below the closing price level. And we now have a range expansion on the upside. Now also take into consideration we had a higher high dumping down and a false break reversal range expansion within the day itself, closing as a first green day, a dump and pump potential template. What we also have, though, is a potential day zero setup. The day zero setup is peak formation high, peak formation low, consolidation heading into a third day, page 84 in the playbook. Now on day 2, prior to our 9 a.m. New York oil market opening, we have a higher high that is made. A higher high breaking the high of Friday, our closing range of the week on our day 3, a higher high that when our 9 a.m. window opens, we have had a range expansion on the upside. Our 9 a.m. window opens on the inside. We reviewed this yesterday. This is the dump and pump template in a market that is now trading on top of closing price. Buyers, first green day, buyers are in control. And we have our pin hammer for our continuation on day 2, also giving us a further range expansion, higher high range expansion on day 2. Tuesday forms our initial balance. That's Monday opening range, Tuesday initial balance. 80% of the time or more, one of those extremes will tend to hold as a high or low of the week level. The market can still trade back to that level, break that level, but one of those will tend to be an extreme in a well-engineered template. Now on Tuesday, day 2, 3 levels of rise, we're 75 cents, but we've traded through that level. We've traded beyond 3 levels of rise on day 2 from our closing price level. But with our range expansion now, we have pressed up just beyond the $1.50 mark. 3 levels of rise from our closing price of the week. Monday's day 1, Tuesday's day 2, Wednesday is day 3. Now, I also want to point out your attention that on day 2, we were entirely above the closing price. On day 1, we were entirely below closing price before the reversal at 9 a.m. The continuation on day 2 at 9 a.m., just after 9 a.m., sorry. And then we have 3 levels of rise, $1.50 above the closing price of the week, heading into our day 3, Wednesday, day 3. We've made a lower below closing price at the beginning of the day. So we've had range expansions on the long side of the market. We've traded below closing price, but then in the London window, we've come back up on top of closing price. We're on top of closing price, and the market proceeds to pump up into the high of day level, higher highs, before taking out the high of the week. We have major red news at 10:30. The New York market opens and pumps higher. The New York equity market opens up at the high of the day before engulfing at the high back inside of our $1.50 level and prior to our major red news release at 10:30 a.m. Now, we still have had higher highs and higher lows. This market breaks down below the lows of the London session and below the low of closing price. So if you were long in the London window off of closing price after the major red news release, you are now underwater. That market does a range expansion on the downside. Lower lows underneath of the low of the Asian session. You'll notice again we auctioned on both sides of the closing price on day 3. Lower lows. We've had a range expansion on the downside now. Remember what Paul Tudor Jones said. When you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. The market pumps back up to closing price before coiling sideways and continuing the move back to Friday's closing price level. You'll also notice that fulfilled as the market's about to close. Our consolidation is above closing price on day 3, the bulk of our day, and it has completed a 200% range expansion of closing price and high of day, high of week level, and 100% expansion below the low of day level. So the open of the market session takes traders in a false move into a range expansion direction before reversing, dropping down below the lows of the London window, lows of the session on major red news, pumping back up to closing price. So again, understanding timing's levels behavior of price. A new hour begins. The 4th hour begins. 11:15 a.m. This market has now put in a peak formation on a smaller time frame for shorting at closing price level. Back to Friday's closing price at a minimum target. The range expansion continued to hit 200% expansion of that high of day, high of week, closing price level. And I will point out one other thing. When the market closed on Tuesday, it closed outside of Friday and Monday's range. Today's opening range, Friday's closing range, and we have a market that has now closed out of balance in breakout. We have a market then on Wednesday that has opened in a market that has closed out of balance. A dump and pump into the open, a parabolic open, out of balance, taking the market even further out of balance before reversing. There's a similar example in Dalton's book, Mind Over Markets, where he talks about crude oil in one example already being out of balance, carried the potential for a double distribution trend day, which we won't go into, but initiating responsive sellers did in fact enter and extend the range down. Traders placing shorts with the selling range extension were well positioned to take advantage of a dynamic downside move that ultimately retraced the previous day's range and closed on its lows. There is nothing new under the sun. The market opened out of balance, pursued to extend the range, trigger breakouts, trap longs up high before reversing, major red news traps all of those longs, the crude oil inventory, similar to a first bar trade, takes everybody, traps them up high, pulls back to closing price before continuing the move down. All of these little things matter, and the more attention to detail traders put into their pre-market assessment of the opportunities, especially on day 3, if you can identify a best trade candidate, this is a fantastic opportunity of a market that was destined to continue lower. And again, day 1, day 2, day 3, range expansion, closing range, range expansion, opening range, putting in the basis, the beginning of a pump and dump 3-day template. Initial balance made higher lows just on top of our closing price level. So even understanding the gap between the weekly closing price and holding traders up higher as the 3-day cycle continues, trapping them up high in a market that closed out of balance on Tuesday, opened up even higher, took traders into the extreme just prior to major red news, trapping them down low, trading back inside of Friday's peak formation high, part of our closing range and opening range in the new week, for a well-engineered free cash Wednesday for several traders who took that trade. This type of template can show up on any instrument. Today I just wanted to break that down into detail, again, to demonstrate the process is what's paramount. Master the process. There's no rush. You had 3 days to prepare for this trade. The calendar helps. We knew there was major red news. Well-engineered templates. There are well-engineered 3-session templates. We'll look at those in the next video. We'll look at the indexes also and break those down. This was a beautiful chart. My advice would be to study this and just work backwards. The basics, the high and low of the day levels, the closing range of the week, the opening range of the week. Range expansions give us very valuable information. And then understanding the pump and dump and pump opportunities, not only within the day itself, but over the course of a 3-day template. Focus on the basics, master the basics. 1% better every single day, traders. This was a huge opportunity today on Free Cash Wednesday. Have a great day, and may the markets go with you.